Hi traders, you're welcome back to the Forex Geek channel. In this channel, we dive into the world of Forex strategies. Basically, we talk about trading techniques, a lot of information that will assist you in becoming a smarter and more confident trader. Okay, so if you are ready to learn a strategy that can refine your trading approach, then you are in the right place. All right. In this particular video, we are going to be exploring the Camelback Trading Strategy. Okay. So just for the purpose of clarity, I am just going to write it here. Okay, so we're going to be discussing the Camelback Trading Strategy in this video. Basically, it is all about combining price action, moving averages, and momentum to identify high probability trade setups. So do not get scared. All right. So let us just get straight into it. First of all, what is the Camelback Trading Strategy? Now, this strategy is perfect for intraday traders, all right, especially those who want to take advantage of market movements with precision. And it is named Camelback because of the patterns it identifies, which often resemble a camel's humps on a price chart. Okay, but don't worry, it's quite simpler than it sounds. Okay, now the Camelback relies on three key elements. This strategy actually relies on three key elements, and the first is price action. Of course, if you are an experienced trader, you will already know what price action is. Yeah, even if you are a new trader, basically price action, as the name implies, just refers to the action of price on the chart, rather how price behaves. In simple terms, how price behaves, on the chart. That's what we call price action, the way price behaves on the chart. Okay, so you need to understand how the price moves, and how it reacts to key levels. When we talk about key levels, we're talking about mostly resistance zones, support zones, and all of that. So that's what we call price action. So you need to understand how price moves and reacts to these key levels. All right. Now, secondly, the next element that this strategy involves is the moving averages. Now, the moving averages help smooth out the price data and reveal the underlying trend. Okay, so I'm just going to add a moving average to the chart right now because it is part of the components of this trading strategy. All right, so the moving averages, basically, they help to smooth out the price data and they reveal the underlying trend. So when we are in a bearish trend, for example, you can see that the moving average shows that this is a bearish trend. When we are in a bearish trend, you can see. When we are in a buy trend, you can see the moving average is also showing that this is a buy trend. Okay, now the third component is momentum. All right, this gives us clues about the strength behind price movements. Okay, so now let us talk about the setup. Right, let us talk about the setup. Now, for this strategy, you will need a few moving averages on your chart. All right, typically traders use a combination like the 10 period, the 20 period, and the 50 period moving averages. Okay, because this gives a clear picture of short-term, medium-term, and long-term trends. Okay, so I'm just going to add let me add the 10 period moving average to the chart. I'm just going to change this period to 10. I'm going to change the color for easy identification. All right, let me make it a lighter color, right, for easy identification. Okay, so we have the green as the 20 EMA, we have the orange as the 10 EMA. All right, so how do you use them? When the 10 period moving average crosses, let us start with a buy. When the 10 period moving average crosses above the 20 period, it's a signal that momentum is building up. Okay, conversely, when it crosses below, momentum could be shifting downwards. All right, now this strategy actually works best in trending markets. So always start by identifying whether the market is moving in a clear direction or stuck in a range. Okay, for example, in this scenario, we can see that it was moving in a clear upward direction. It's important to always identify the direction of the trend. In this scenario, we can see it was also moving in a clear upward direction. So make sure to identify the trend. Here we can see it was moving in a clear downward direction, right? Here again, we can see that it was moving in a clear downward direction. And here, a clear upward direction. Can you see that? Then you can see that in this situation, the price was consolidating within a range. So this would have been a place to stay out, or rather a place to avoid, as price was moving sideways. There was no clear trend in this scenario. Okay, now let us talk about price action. All right, so you have to look for areas where the price pulls back to the moving averages. Okay, so remember that moving averages are a key component of this strategy. So let's just use this as an example. All right, you have to look for areas where we have a pullback. You can see here we had a pullback to the moving average. Here again, here again, here again, here again. Okay, now these pullbacks often act as support in an uptrend. You can see this is a clear uptrend, right? And these pullbacks were acting as, the moving averages were acting as dynamic supports. Okay, and these are the camel humps. All right, these are the camel humps that we are watching for. So when the price touches these levels and starts moving back in the direction of the trend, that's your potential entry point. Okay, so you can see this example. Now you can see how the moving averages is helping to define the trend. You'll notice how the price pulls back, touches the 20-period moving average, and then resumes the upward trend, right? So this is a classic camelback setup. For entries, you can place a buy order just above the high of the pullback, right after the pullback forms. Right after the pullback has concluded, you can place a buy order. All right, that is in an uptrend, obviously. Then in the case of a downtrend, you can see we had a pullback to the moving average. Here again, a pullback. So you can place your sell order right after the pullback has concluded. This is in the direction of the trend, right? So you're gonna place your sell order, in a sell trend. Okay, so make sure you always use stop loss orders to manage your risk. Usually just below the most recent swing low for a buy trade. So if you had entered a buy right after the conclusion of this pullback, you can set your stop loss around here. Then in the case of a sell, let's say you had entered right after the conclusion of this pullback, you can set your stop loss right above the swing high. Okay, so remember, the camelback trading strategy is not foolproof. Okay, no strategy is. So always combine it with solid risk management. Aim for trades where your potential reward is at least twice your risk. So talking about take profits or exiting your trades, before you even enter the trade in the first place, try to calculate your potential profit, or rather try to examine your potential profit target. So if you were going to enter a sell around here, now we should be looking at resistance, or rather support zones for our exits, right? We should be looking at support zones for our exit, and this is an important support zone, right? So what you would have done was to calculate the distance to your stop loss. That was going to be about 30 pips, and then your potential exit, which is going to be this support, which is going to be about 60 something pips, right? So we have a risk to reward ratio of 1 to 2. You are risking about 30 pips to make about 60 pips, right? That's times 2 of your risk. Your reward is times 2 of your risk. So if your reward is times 2 of your risk, minimum of times 2, it could be times 3, it could be times 4, times 5, 7, 10, whatever the case may be, right? But so long as it is minimum of times 2, you can go ahead and enter that trade, all right? But if it is not up to times 2, I will recommend not to enter that trade, okay? And do not overtrade. Stick to the high probability setups that align with the strategy, okay? Now, if you want, a longer term trade, right? If you are the kind of trader, maybe you hold trades for a longer period of time, or you prefer stronger trends and all of that, you can decide to also add the 50 period moving average, and then perhaps you can go to a higher time frame, or you can still stay on, maybe the hourly time frames and trade on them. However, you will notice that the 50 period moving average reacts slower compared to the 20 and the 10. So you will notice that even in this buy trend, the price hardly pulled back to the 50 period moving average. It was mostly the 10 and the 20. So that is the reason why the 10 and the 20 are like the most common, moving averages that you should actually consider using if you are using the Camelback trading strategy. But if you want a stronger trend, for example, situations whereby um, the trend is likely to last for a longer period of time, or maybe you want to swing your trades, then you can decide to use the 50 period moving average as well. You can see in this case it pulled back to the 50, pulled back to the 50 again, pulled back to the 50 again. Now this trend was quite strong and it was a gentle slope, right? You can see that in most cases it's gentle slopes that will pull back to the 50. Now you can see that this slope was quite steep to an extent. Yeah, it was quite a steep slope to an extent. So you can see that it did not pull back to the 50, but gentle slopes usually pull back to the 50. Like you can see in this case, you can see we had quite a gentle slope, and the swings we are getting to the 50, and in fact it was even crossing past the 50. Okay, so always watch out for pullbacks, the moving averages for entry opportunities. Always confirm your entries with price action and momentum, and always use proper risk management. Okay, so if you found this breakdown helpful, go ahead and smash that like button. It really helps the channel reach more traders like you. And if you want to master more strategies like this, make sure to hit the subscribe button and turn on notifications so you do not miss a thing. I've got plenty of in-depth Forex content coming your way. In the meantime, thank you for watching, and I will see you in the next video. Happy trading.